Everybody, welcome to Wiley Solution Walkthrough Accounting Tools for Business Decision Making. Textbook authors are Jerry Wygant, Jill Mitchell, and Paul Kimmel. This is the 8th edition. This is my solution walkthrough video for exercise 18-8. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are mine and not the authors of the textbook or of Wiley. Okay, so let's go ahead and before we say thank you, let's go ahead over here and take a look at exercise 18-8. So all that Blooms provides environmentally friendly lawn services for homeowners. Well, are we supposed to get rid of our lawns? I don't know. Its operating costs are as follows. So we've got over here, we've got straight line depreciation, we've got advertising, insurance, weed and feed, materials, $12 per lawn, direct labor, and fuel. Maybe we should be going electric. All that Blooms charges $60 per treatment for the average single family lawn. For the month ended July 31st, 2025, the company had total sales of $7,200. Prepare a cost volume profit statement for the month ended July 31st, 2025. Be sure to include rows for per unit and percentage of sales information, and then determine the company's break-even point and the number of lawns serviced per month, and then in terms of sales dollars. Okay, so when we're going through and looking at a contribution margin or a cost volume profit, variable costing income statement, I'm going to start up here with my sales. Okay, so right over here, my sales are a total of $7,200. And I'm charging $60. So my per unit is $60 per unit. So that means my lawns serviced, or my units, this is going to be 7,200 divided by 60, or 120. Okay, so those are my sales, less my variable costs. Now, without additional information, it's going to be hard to tell some of these things are variable or fixed. The depreciation straight line, because it's not changing, this is going to be fixed. Advertising, we're going to treat this as a fixed cost. Insurance, this is also going to be fixed. Weed and materials, direct labor, and fuel, these are all going to be variable. Okay, so weed and feed, direct labor, and fuel. So right over here. So if I sold 120 units, I'm going to need 120 of weed and feed, 120 for direct labor, and then I'm also going to need 120 for fuel. My weed and feed are 10, 12, 10, and 2. So my total, so if I come over here, and I basically say that, all right, we've got so my total variable costs, right? So over here, going to be 24, 2,880. So my contribution margin is going to be my sales minus my variable costs. From that one, I'm going to go through and do less fixed costs. So I'm going to have my depreciation, advertising, and then insurance. Total fixed costs, and then we're going to have net income, variable costing. Okay, so if you're taking my class, I'm kind of loose in terms of the way like how most of these things work as far as like what you're going through and calling it. As you'll also know too, I'm not really big on formatting. If someone's really curious about formatting, then you probably want to ask them if they're a CPA or not. I just don't. To me, it's just not worth the time. So let's go over here. Okay, we got a whole total here is 720. All right, so let's go ahead and look it up. Maybe the answer should have been 420 with the weed and feed, but we're going to see right now. And let's go to exercise 18-8. Oh, 720. Nice. Okay. So we've done that properly so far. Now we're going to go and figure out different types of things. So let's go back over here. And we're going to come over here. So it's asking us to do break-even point in lawn service per month and in sales dollars. So for this, we're going to go to our ratios. So over here, the break-even point in our units is our fixed costs divided by our contribution margin per unit. What is the contribution margin per unit? It is the sales price per unit minus the variable cost per unit. So over here, my contribution margin on a per unit basis is going to be my sales per unit minus my total variable cost per unit, or $36, right? So this is my contribution margin per unit, which is my sales price per unit minus my variable cost per unit. So this is going to be 60 minus 24. I combine these three items here because they are all variable costs. And this is going to give us the 36 that we're looking for. Okay, so right over here. So the first one I'm asking for is break-even points in number of units. So break-even point in units are my fixed costs divided by my contribution margin per unit. Okay, so my fixed costs are 3,600. My contribution margin per unit is 36. So my break-even point in terms of basically my break-even in units is 100. The next thing they're asking us for is the break-even point in sales dollars. So my break-even point in terms of sales dollars is going to be right over here. And this is going to be my fixed costs, which are going to be the same at 3,600. But then I'm going to have to come up with my contribution margin ratio. Well, what is the contribution margin ratio? Well, it's going to be the contribution margin per unit divided by the sales price per unit. So let's go ahead and copy this one over here too. My contribution margin per unit is 36. My sales price per unit is 60. So my contribution margin ratio is going to be 0.6. Okay, so I take 3,600 divided by 0.6, I get 6,000. Now, the most important thing you can do when you're going through and doing these questions, and I always tell my students this, don't take it for granted, work it through. What do I mean by that? Well, make sure it works. We're saying that if we reach break even, we have to sell 100 units. So let's put in 100 on each one of these here. Right, so if I put in 100 on each one of these here, 100 times 60 is 6,000. 100 times 12 is 1,200. 100 times 10, 1,000. 100 times 2 is 200. Variable costs per unit aren't changing. Contribution margin per unit is not changing, but I have this over here. Now, when in terms of the depreciation expense, still at 1,400, advertising still at 200, and this is going to be over here at 2,000. So over here, my total fixed costs are 3,600, and my net income under variable costing is going to be 0, which is break even. So when I look at what I just computed down here, right, my break-even point in units, it's 100. My break-even point in sales dollars, that's how we know it works. Again, when you do these questions, right, especially as you're going through and learning, it is extremely important, especially if you're in my class, because I will do things to mess up your world. Do not strictly rely on these formulas. Go through and do the work yourself, okay? You really want to make sure that you're going through and doing that just to make sure you're getting the proper answer. So in any event, I want to thank you for being here today. If you have any questions or you would like to see some other videos, feel free to ask me below in the comments. And again, I always want to give a shout out to Wiley for allowing me to do this. For how much longer, I have no idea. But in any event, I will see you on the next video. Have a great day.